You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Mike, welcome to the show and happy American Thanksgiving. How are you doing so far?
Oh, how are you doing?
I'm doing fine, Mike. Thanks for asking. OPEC has just announced they're going to continue to pour oil onto the world markets. Is that a good or bad thing?
Well, it's a good thing for most people in the United States, at least, who drive and have to pay for gasoline. Not such a good thing for shale oil companies and probably Canadian companies. But I think, for investors, not now, but I actually think it's a good thing too, because it gives us all an opportunity to sit back and let these oil stocks fall more and eventually buy. I don't think the time's now, but maybe sometime next year, or, just be very patient. And one of the things about oil, why I don't think it's bottomed and it can go lower, is if you look at the Commitment of Traders report, which measures the activity in the futures market and breaks it down into various categories of traders, two really fascinating things have happened in the past couple months. On one hand, small individual traders and speculators have built themselves up at a very large, long position of oil contracts, and they tend to be wrong at important turning points of the market. So they had built this position up several months ago, and now they're being forced to suffer losses and will sell and whatnot. But what's really noteworthy is in the futures market, you have commercial operators and producers which use oil contracts to hedge their operations, and they tend to be right at important market turning points. I know we've spoken about their activity when it comes to the gold market in past interviews, but in the oil market, they have built themselves up by July the largest short position they've ever had in history. It's a massive, massive position, in fact. And, of course, since then, the prices have dropped, and their position is still extremely large, even though they've been closing some of these contracts. What that all suggests to me is that I don't know who these people are, but it would certainly seem that some very large players in the world oil markets have fully prepared themselves for this drop and have hedged their operations and locked in prices much higher months ago. Maybe these are people in Saudi Arabia. Maybe they're people in Russia. I can only speculate, and I can't prove anything there. But the fact of the matter is, someone or some people with massive amounts of money prepared themselves for this move.
And how did they prepare themselves?
Well, they shorted oil in the summer. We get the largest oil short position by commercial operators ever in the history of the oil market. Bottom line is, that suggests to me that the oil prices haven't bottomed. They could easily go lower, and they're not going to go up until the short position is reduced.
In other words, the big players are betting against themselves.
Yeah, exactly. And when the news came out of OPEC, I was reading a couple articles about it, and they mentioned that Saudi Arabia, once it said that they don't mind lower oil prices because they can use it to get more market share. In other words, if oil prices drop and shale oil operations have to shut down, and other people who are producing oil at bigger prices in Saudi Arabia, well, Saudi Arabia will keep making a profit, and they'll sell their oil and grab more market share. And so other countries over there, such as Russia. If oil falls to $60 or $50 and stays there for 6 months or a year, the whole shale oil industry in the United States will be in serious trouble. And, the companies will go bankrupt, the boom in these towns will be over, and Saudi Arabia and Russia will sit back and they'll reap the benefits, because when the oil prices then rebound, they'll be there to sell it, and many of these other, smaller operations, they won't be around. It's brutal.
Some people say what's happening with oil is actually the first time the free market has had a chance to operate without interference from central banks. Is that your interpretation?
Well, that's an interesting point because, if you look over the past couple of years, this quantitative easing that's taken place in the United States has helped the stock market, and I'm sure it's also helped oil prices. And now that that's gone for the moment, oil prices have been dropping. So it could be that might have something to do with it also.
If you're the average investor, were you silly to get into oil in a big way anyway?
Well, I don't know. It depends on when you bought. I think oil companies are actually good investments most of the time. A lot of them pay good dividends and, they make profits, but it's just what has happened in the market. Like most sectors in the stock market, they ran up huge valuations, and anything in the stock market is vulnerable due to that fact. And now that the price of oil has dropped, these stocks are getting crushed. But I do think at some point it'll be good to invest in them again, for sure.
Is there a short-term investment to avoid the oil drop?
I mean, if someone really wanted to, they could short some of the ETFs for oil stocks, but or take some profits. But yeah, it depends on where someone got in at, if they have losses or not.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Mike Swanson from WallStreetWindow.com. Mike, with lower oil prices, is there a chance for other businesses now to maybe attract investors now that oil's not the hot stuff?
Oh, sure. I mean, there's money, there's money being pumped, and, we're still, for the moment, the market is still going up, and, obviously there's money going into it, until, it tops out for good and rolls over. There'll be sectors moving here and there, but that's the tough thing. The stock market has gone up for 5 years, and I think we're in the end of a bull market, frankly. And what you're seeing is, for the moment, every week there'll be leadership shifting into one bubble sector, and now it's biotech stocks that don't have any earnings. So at the moment, that's what's going up the most this week and the past 2 or 3 weeks. I can't really tell people to invest in that because it's a bubbleable market, and a lot of these companies don't even have earnings. Frankly, I think the place to invest is in gold and in mining stocks now because they've already had their big drop and seem to be bottoming out.
And what about European or Asian markets? How are they going to fare?
Well, the European markets they took a hit in October and they've since bounced back up, but they haven't bounced nearly as much as the U.S. stock market has. Most world markets are actually lagging now, so I really think it's really I think a time for people to be more cautious.
And if you have investments in these, perhaps get your cash while you can and wait for the bargains a year from now.
Yeah, that wouldn't be a bad thing to do.
Anything else, Mike, you want to add to this?
Well, what I was saying about the oil market with all these commercial shorts, I mean, it's a massive position. If you flip and look at the gold market, the opposite has happened there. There, the commercials and hedgers, they have a very small short position, the size of which they usually have at important bottoms. And then at the same time, the small individual trader in the gold market has a record short position over 10,000 contracts as of the last report. So, I mean, that tells you the public is bearish on gold, so bearish that in the futures market, they're actually actively trying to bet against it. And I like to bet against the public at times like this. So that's my recommendation. If someone wants to do anything to make money, bet against the crazy masses, individual traders trying to short gold.
Oh, they always say if you want to make money, if you hear a lot of news about something, it's too late to get in.
Yeah, well, that's often the case. It's often the case.
Mike, enjoy your turkey.
Thank you. Will do.
My guest has been Mike Swanson from WallStreetWindow.com. You can contact Mike by email. You can punch in WallStreetWindow@gmail.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.